Hi there, this is Adam Huxama from Bankable, and I am just going to walk you through this cash flow projection template um, that we created to try to help uh, our clients kind of figure out what cash flow is going to look like amid the COVID-19 pandemic and just kind of visualize um, what kind of bridge loan financing you might need and how long that financing can help you last through this crisis. So I'm just going to walk you through the spreadsheet and show you how to fill it out. The first thing that you need to know is that every cell that's highlighted in this light blue is a cell or an assumption that you can change and you should change with your own assumptions or information. So you're going to want to start by putting in your current cash balance, how much you have in the bank right now, and then a proposed bridge loan. So let's say you had $5,000 in the bank, you're hoping to get a bridge loan of $10,000. That'll give you a new cash balance of $15,000. Now we're saying for March 2020, you're starting with $15,000 in the bank here. So now in row 9 here, what I expected to generate in sales each month before COVID-19. So let's say you were really steady, making $12,000 in sales per month, but you're expecting to see some major decreases. So maybe March, you're already expecting a 30% decrease, and April and May outlook is looking really rough. So we've got a 60 and 50% decrease, and then we're showing it slowly start to come up. Now, this really just completely depends on your specific situation. So put in some percentages here that you think are realistic for your situation. Some folks are being forced to completely shut down, and so this could be 100% decrease in sales, so no sales at all. For this example, we're just going to go ahead and still stick with 30% decrease. Now, that's going to give you your new sales expectation for each month once we discount it by that decrease. Now jumping into labor cost as a percentage of sales. So this is your cost of goods sold. So let's say you have a business where you're paying folks hourly. Maybe you charge your customer $100 an hour for some service, and you pay your employees that are doing that billable work $25 an hour. Maybe that's their total wage plus benefits. So then if that was the case, if you're charging 100 and your client or your employees get paid 25, that means your labor cost as a percentage of sales is 25%. And now maybe you have material cost as well involved in what you're selling, and you can put that in here too. So maybe you sell a food item and that costs you 20 cents for every dollar worth of sales. So this says material cost. It could be food cost as well. And that's going to give you your new expected gross profit for each month. Now we're going to jump down into just your monthly expenses and cash outflows. So at the top here, we've just got some arbitrary categories here: loan payments, credit card payments, advertising, insurance, rent, wages. So now this is a key point. These wages and salaries would be separate from your labor up here. Oops. Okay, there we go. Separate from your labor up here. And so you don't want to double count. So if you're paying people this way through this labor cost as a percentage of sales, then don't double count their wages down here. This might be for your managers, perhaps, people that aren't being paid when they do billable work, but are just paid a flat salary. That's what you'd want to put in this category. Utilities, office supplies, And then we just have some slots here for other expenses, so you can overwrite these to whatever you want. So maybe you have fuel cost, you want to put that in there, you can do that. And then what I want you to do is come in this column B and put in what your typical monthly expense or cash outflow would be for each of these categories before COVID-19. So in a normal month, what would these expenses be? Put that in just so we can see and kind of understand that. And then over here, starting in column C, all the way to the end of the spreadsheet, which takes you to the end of 2020, put in what you expect that to be going forward. So, there's a lot of different programs, and lenders are offering 3-month deferral on payments. So let's say you're able to negotiate that with your lenders and you get a 3-month deferral on these loan payments here. So you could put in zeros. Let's say you just start making minimum payments on your credit card. So it goes from $500 down to $50 per month. You've got advertising. Let's just say you stop advertising altogether. So you don't have the funds right now and you're just in survival mode. So you do probably want to continue paying your insurance. That might be just an absolute necessity. Negotiate with your landlords. Maybe your landlords will give you a 3-month deferral or decrease in rent for a short period of time to help you through this. Maybe this is your wages and you say, you know what, I can take $1,000 a month pay cut for a short period of time. So that goes down. Employee benefits, maybe this is health insurance and you really that's going to stay the same. You need to keep paying that regardless. Utilities, some utility companies are saying, don't worry about paying utilities for a short period of time. They're not going to turn you off. And so if that's the case, you could put that down to 0 as well. Really what we're doing is just trying to say, okay, what is the absolute minimum amount of cash that we can spend and still survive and stay in business in the short term. And so that's what we're going through here. Once you do that, before in a typical month, we are showing $7,350 in cash outflows. And now we've got that down significantly here for a short period of time. And that's what we're looking for. We're looking for clients to try to reduce expenses as much as possible, and then also come in with hopefully some bridge financing that will help you make it through this. And so now we have cash flow. So this is showing you your positive or negative cash flow each month. And you can see when in the months right at the beginning here, where we're just deferring all sorts of payments, you're still actually positive cash flow. But after those 3-month deferrals are over, now you're back into negative cash flow. And so we want to see that. We want to see kind of what that's going to look like. And then this last column here is just going to show you your cash balance at the end of each month. Now, this was assuming we got a $10,000 bridge loan. So you can see that we're still dropping down based on the assumptions that we have in here, even through the end of 2020. Now that is, that's assuming that we're still having, this was the sales line, still having a decrease in sales of even 5% in November and December of 2020. So, hopefully that is not the case. Hopefully sales increase to catch up and make up for lost time by this point. But these are numbers that you can play around with and that your lender is probably going to play around with too, to look at different scenarios and see how long the business can survive during this COVID-19 pandemic. So hope that makes sense. If you have questions, please reach out to your loan officer to help you complete this. Thanks.